What's up guys, Jake here. We got a lot to cover today. In the event you don't know who I am or what I'm doing, check out that playlist down below so you can catch yourself up. And in this video, we're going to talk about 4 positions that I have sold and 5 new positions that I've added. So I've changed up my portfolio massively in the last 2 days to stop this reversal. I was almost completed for the challenge, getting to 50,000. I was just under 48, and then it started going down. So had to adapt and pick some new stocks to get into. However, I am still up 70% year to date since January 1st when I started with $25,000. I'm still comfortably beating that index fund. And the positions in this video are current as of April 28th. This is trading day 80 of 252 for the year. These are my positions as of yesterday when I did my last update video. You can pause the screen if you want to see exactly what my numbers were. I was in 14 positions and it has changed to this, and it looks dramatically different than it did a week ago. And I think I'm in 15 positions now, so we're going to cover what's been removed and what's been added. First up are the 4 companies that I sold, and that would be the defense contractors, Huntington, Northrop Grumman, and General Dynamics. And then I also sold Bank of America just because it was its time. So with Huntington Ingalls, once again, all of these companies have good fundamentals. I think they're undervalued. If you're a buy and hold long-term investor, there's nothing wrong with Huntington Ingalls or the rest of them. However, I'm looking to capture uptrends and momentum. And Huntington, along with the other defense contractors, looked like in early March that they were going to take off. And Huntington got to about 209, 210, and then sellers stepped in. And it's been trading sideways for over a month. And with call contracts, it's pay to play. If I'm on the clock, if I'm not making money from price movement, I'm losing money from theta decay. So will Huntington go up in the near future? Possibly. However, I feel like the trend has been broken. It did bounce off basically its 20-day moving average, so this could continue trending up, but this subsector of the industrials is just kind of politically charged. These stocks were depressed because of the election, and there's just this perception with the change in power in Washington, perhaps these companies won't be as profitable the next 4 years. I don't know. But when I read the chart, it's not good, so I'm just going to move on. Once again, I'm not married to any stock or any position. If something doesn't look right to me, then I'm just going to move on. There's so many stocks out there to choose from, I can be as picky as I want. So I was positive on my position. I bought to open at $8.50. I sold to close at $8.99. I made a profit of $48.70. Next up is Northrop Grumman, and their stock chart almost perfectly mirrors Lockheed Martin. Lockheed Martin reported last week, and the stock took a nosedive. Once again, it could receive buyer's support and start trending up, or it could continue falling back down to its 52-week lows. I don't know. These companies' fundamentals look good to me. When this trend took off in March, that's when I hopped on it. However, as soon as Lockheed Martin reported, all these stocks hit a brick wall and they stopped going up. So that means that buyers looking to join a rally, like me, once they see it halt, then they get bored and they're going to move on to a different sector or industry. So Northrop Grumman could keep going up, or it could fall back down to 300. At this point, I don't care because I sold it. So I bought to open, and I actually had 2 call contracts because I was getting greedy. One I sold for a loss, one I sold for a profit. So let's average them. I bought to open between the 2 of them for $3,500. I sold for $3,800, made a profit of $367. General Dynamics looks more like Huntington Ingalls chart as opposed to Lockheed Martin or Northrop Grumman. Once again, April 1st, it plateaued at 185 and it's been trading sideways almost a whole month. Could it continue going up? Maybe, but I'm bored and I'm moving on. So I bought to open at $8.50. I sold to close at $13.09. I made a profit of $458. Last stock I sold is Bank of America, and that's just because I'm coming up to the last month of the call contract. that's when most of the remaining extrinsic value wastes away, so I don't want to hold it. Could it continue trending up? I think so. I'm actually going to start selling put contracts on Bank of America in my Fidelity account to generate income every month. So this is a very great stock to trade options on right now. I bought to open at 172 and I sold to close at 352. So I made a 100% return on my investment, but I only invested $172. This is a very cheap stock. I should have bought 5 of these call contracts, but profit's a profit. I'll take my 179, thank you. Here's my Excel spreadsheet of all my trades since January 1st. Here are all the stock trades that I've made. I've pretty much stopped buying and selling stock. These are the sold options. The one covered call I sold on Xerox in February, and then the rest have been put contracts that have been sold that have not been exercised. And then these are all of the call contracts that I've bought. I've never bought a put contract for this challenge yet. I might do that in the future, but you'll see here I've locked in a profit of over $10,000 from all of these option trades, which is pretty phenomenal. Before we talk about the new companies that I invested in, let's quick talk about Facebook and Apple. They did report their earnings after the bell today when I'm filming on Wednesday. And I predicted Facebook would go up and Apple would go down. The other mega caps have already reported. Tesla pretty much did nothing, and Microsoft dropped, even though once again good earnings. Let's see here. Google shot up because I think YouTube AdSense is doing phenomenal. Thanks for watching YouTube, by the way. And I was so confident that Facebook was due for a breakout, that it was so well rested, that I bought a second call contract. So I have one with a strike price of 305 expiring in July, and one for a strike price of 310 expiring in August. And I was right, because after hours Facebook reported and it shot up $14 a share, or 4.83%. That is a huge move, and I'm hoping when the markets open tomorrow morning, more people start buying and a new uptrend continues, because, I mean, these 2 call contracts, this could capture thousands of dollars worth of value over the next couple weeks. Apple didn't really move that much. It did go up 1%, but there wasn't a sell-off, so it looks like people are unaffected by what they're hearing, or Wall Street insiders are unaffected by what they're hearing from Apple's earnings report. Okay, we've gotten to the good parts. I have for you 5 companies, 5 stocks. I have researched hundreds of companies and come up with these 5. And probably no other YouTubers are talking about these companies. Maybe, I don't know, somewhere. But these aren't the usual small cap IPO SPACs that other YouTubers talk about. Once again, on my channel, I like boring, predictable, large cap stocks that I can then leverage my money on with call contracts to capture value. I'm trying to make money. I don't need to make this any more difficult than it needs to be. These are very 5 reputable, boring, safe, predictable stocks. So let's make some money. Hca Healthcare is a healthcare company, shocker, based out of Nashville, Tennessee. If we look at their 5-year charts, this stock has been on a tear. It was 150 pre-pandemic. It's then recovered since November, but has shot up huge. Healthcare is kind of the last sector in the S&P that has not become excessively overvalued yet. So I was looking for a good healthcare stock to pick up, and I like HCA the best. So when you look at their 6-month trend, it looks incredible here. So once again, it fell off a cliff last year, and it's been recovering nicely. But as they keep getting earnings statements, which have all been good, they reported on the 22nd, yeah, the healthcare industry is doing fantastic. So let's go on macro trends and look up HCA's metrics for you. Once again, there's always these 5 things that I look for. The first one is revenue growth. Is the company making more money year after year, quarter after quarter? They're doing good. Next up is net income. Do they make a profit? Revenue minus expenses. And yes, they had a, let's see here, a monster quarter reported on 3/31. They're doing great. Shares outstanding, we want this going down so that your equity in the company becomes more valuable over time. Yes, they don't do a lot of stock buybacks, but it's pretty good. Price ratios, how is this company valued today as opposed to where it's been valued in the past? And their P to E currently is 14.83, and it's a little high relative to the last couple years, like 2018-19, but it's not too high for this market in my opinion, and considering how well they're doing, I'm willing to give them a pass for that PE. When we look at price to free cash flow, it dipped because of the pandemic the last 2 quarters. However, it's currently only valued at 10, which is much lower than it's been valued in the recent past. The next 2 stocks are home construction companies. The first one is Pulte Group. I don't know if I'm saying that correctly. It's based out of Atlanta, Georgia. And yeah, I'm hearing it on the news that the price of everything as far as home construction materials is going up. Now, that helps these companies' margin. They're still building, and I think a lot of state and local governments are doing everything they can. There's such a housing shortage nationwide right now that governments are starting to notice, and they're starting to ease regulations in order to help home builders build more. If they're building more at higher prices, they're making a lot of money. So this stock was fell off a cliff, and then everybody realized, hey, with low interest rates, everybody wants to buy or build a new house. It's shot up huge recently. However, they just had an earnings report on the 27th, and everything was good. So let's look at their 6-month stock chart on Yahoo Finance. Once again, it's shot up huge, so it's probably going to pull back just a little bit in the next couple days. However, I see this uptrend continuing because they have pretty good valuation. Let's look at their revenue on. Revenue is increasing. Let's look at their net income. They're profitable. Let's look at their shares outstanding. Looks like they do stock buybacks. Shares have been decreasing. Price ratios. Once again, this is with their stock already running up huge the last couple months. Their PE ratio is only 11, and I think it's going to improve as maybe more construction happens in the summertime. If they can get supply issues resolved globally, they're going to build a lot of homes this summer. Their price to free cash flow ratio is 19, which is a pretty good valuation to where it's been in the past. But in general, I think this is a hype stock. I think that people following the news and the nationwide inventory shortage for buying homes, it's putting pressure on the home builders to build more. Governments want to help that. I think for that reason, people are going to keep piling into these kinds of stocks, and I thought this one had a good valuation. Another company I think has a good valuation is DR Horton. Once again, another home construction company, this time based out of Arlington, Texas. There's a huge business and housing boom happening in Texas right now. So let's look at their chart here. And this stock was at 61 prior to the pandemic, shot up to 68. They also just had earnings report, and it's shooting up again. I don't think you're too late to the party for this one. So ticker symbol DHI. Looking at their 6-month charts, there was a little bit of a pullback today, but it's got this nice uptrend pattern of higher highs and higher lows trending up. We'll go ahead and look at their fundamentals. Shocker, it's going to be good. So their revenue looks beautiful, increasing over time. Net income, their profits are increasing. Shares outstanding, once again, it's been going down the last couple years, which is what we want to see. Price ratios, it is currently valued PE at 11, which is a good PE for where it's been in the last couple years. Price to free cash flow, let's see here, it's currently 34, which is a little high, but once again, I think these home construction stocks are going to be on a monster tear the next couple months as we get into this summer. Next stock is Marsh Mclennan, and this is a boring insurance company. But look at this stock chart. This stock was at $63 5 years ago, and it's up 112%. Pays a 1.39 dividend, $68 billion market cap. headquartered in New York, and the insurance companies are doing pretty well. Once again, with the whole pandemic, I think people were nervous about them. Let's go ahead and look at their 6-month chart. And the reason why I like this stock so much is because look how well rested it was. It was stuck in this range between 110 and 120, and it had been trading sideways for over 6 months. So the stock was very well rested. It was due for a breakout. And when you check out their fundamentals, all good news. They also had an earnings report on the 27th. Once again, the green lights for a breakout. They had a monster quarter. They're doing great in revenue. So revenue quarter after quarter, year over year, looks great. Net income, the profits are increasing. That's good. Shares outstanding. Didn't go down the last 2 quarters, but in general, they do stock buybacks. So that's good to see. Price ratios. How is this company valued? PDE is 34, which is a little high, but this company has had PDE in the 30s in the past before. Price to free cash flow, let's check that out. And currently it's at 22, which is a little bit lower than where it's been valued in the recent past. Now with this stock, it did shoot up huge on earnings the last 2 days, so there might be a slight pullback for the moving averages to catch up, but this stock I think might continue trending up until we get at least into the 150s. Last company I bought a call contract on is a company called Celanese, and it just says technology company. It is a Fortune 500 company based out of Irving, Texas. I went on YouTube to watch a video of what does this company do, and I don't really know, but it looks like a very reputable, very professional technology service company. So let's look at their stock charts the last 6 months. Well, actually, let's look at the last 5 years. This stock has more than doubled over the last 5 years, dividend yield 1.74. It's run up huge. The stock was down at, let's see here, bottomed at 64, and it's up 150%. So this uptrend is pretty decent, and you can see that when it hits nice round numbers, so it got up to 130 in November and then traded sideways up until February. It's now in another breakout. This company also had their earnings on April 22nd. It was good news, so I feel like the stock is on an uptrend. As soon as it gets close to the 20-day moving average, somebody steps in. It just keeps going up. So let's check out Celanese's revenue, and it looks not as nice as I usually like seeing for my companies. You can see it's kind of episodic, and I don't know what's causing this. I don't know enough about the company. However, you can see that their revenue the last 4 quarters has been increasing, which is pretty nice. Let's check out their net income, and you can see that they had a monster quarter for December. However, their profits were good as of March 31st as well. Shares outstanding, they do stock buybacks, so shares have been decreasing. They're probably committed to that. They've been doing it even during the pandemic. Price ratios, this is what I like to see though. Here, check out this. PDE is only 8, which is very low compared to where it's been throughout its history. Let's look at price to free cash flow, and it's currently at 21. Once again, lower than it's been valued for most of the last 5 years. So for that reason, I just think this company, even though their revenue is a bit wonky and I don't 100% understand what they do, I think it's a pretty good buy. And the stock chart shows that it's in an uptrend. They had a good quarter, revenue is increasing, so I think this is a good pickup. If you saw my last update video, you know I also added Clorox and Danaher, so I have 7 brand new positions in my portfolio as of the last 2 days. So I have to give these companies a couple weeks to see if they can get the job done, if they can get me over 50K for my brokerage account challenge. If you want to, once again, figure out the break-even prices for all of my contracts, just add the premium I paid to the strike price. I always put a screenshot of my brokerage account anytime it changes on the community tab of my YouTube channel. You can go there to check it out. Just a quick recap, I still have those puts on Viacom and Discovery, and I'm probably going to start selling more cash secured puts. I have a lot of buying power, and I just don't want to be 100% leveraged on call contracts anymore. So to use up that buying power in my accounts, I do want to start selling puts, which is obviously a way to collect premium, collect income, and not have as much risk as a call contract. So with the, let's see here, 2, 4, 6, 8, 10, 12, 13 call positions that I'm in, they're all in an uptrend. I think all the fundamentals for these companies are good. I think they're not overvalued. So as long as the uptrend looks like it's continuing, I want to hold them up until a month before they expire, and then it's time to get rid of them. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. I'm feeling pretty good about all of my positions. Once again, I know I don't recommend stocks that other finance YouTubers recommend. There's no IPOs, SPACs, penny stocks, or companies that don't make a profit in my portfolio. But once again, I'm going for those boring, obvious, reliable stocks, and I'm just trying to ride that wave up if I can. Thanks for watching, and until the next video, take care.